to the Smart Property Investment Show with your host, Phil Tarrant. This podcast is brought to you by Defence Housing Australia. Invest in a Defence Housing Australia property and they'll pay your rent, manage your tenants, and even take care of day-to-day maintenance. Rental income is guaranteed for up to 12 years. Your rent is reviewed annually to market value and will never fall below the starting rent. So all you have to do is sit back today and look forward to tomorrow. To find out more, call 133-DHA. That's 133-342. Or visit dha.gov.au/lookforward.
Today, I'm joined by Tom Panos, who is an auctioneer, probably one of Australia's best auctioneers, I reckon. Is that a fair call?
I think if you're an auctioneer, you've got to actually think that way. You've got to actually back yourself. I think you've got to show up to your clients who are real estate agents to believe that you're going to get the best price. So I'm going to confirm with what you've just said. Yes, I do think.
That's good. So, Tom, I want you in today because as a property investor, I've bought a lot of great properties at auction. I've also bought a lot not through the auction process. And me as an investor, I prefer to buy before it gets to auction because I'm trying to identify those properties that no one else knows about before they even hit realestate.com. But if it ends up at auction, I want to be the guy that secures it for the lowest price possible. Yeah. So how many auctions do you do every single weekend?
About 10 every Saturday, and I've been doing that for about 15 years.
So how many auctions do you reckon you've done?
I think about between 6,000 to 8,000.
Okay. So you've done a few.
So I can't tell exactly, but I'm having a guess it's 6,000 to 8,000 based on the fact of how long I've been auctioning.
All right, that's a lot of auctions then. So I've stood and bid at a lot of auctions. I've probably been successful 20% of the time. I generally have a threshold that I'm happy to go to, and then I'll cut it off and stop from there. You've done a lot of auctions. You've seen a lot of investors in bid at auction. By and large, do you think most people understand the auction process, are effective at the auction process, or do you think most investors go into auctions blind and don't know what they're doing?
Okay, I think the demographic of where they buy seems to affect that a bit. When I'm auctioning in specifically the inner west, where you've got a clientele that's typically bidding on a property, say in Newtown, I find that they're a pretty savvy consumer. And these people are trading in and out of real estate every few years, so they understand the process, Phil. When you're looking at an area, for instance, say, like I've done auctions on the weekend in, say, Lidcombe, maybe which will be more of a family area, or hypothetically, say, Concord, where you have people that might stay in a property for 10, 15 years, they are less inclined to know about the process, and so the area's got a little bit to do with it. But one thing is for sure, Phil, that every person could actually know a little bit more about it.
About the auction. So say I'm bidding on a place this weekend in Canterbury, and I know you do some stuff out there. Yeah. Me as an investor preparing for that auction, what should I know to allow me or give me the tools or the capabilities to bid better at that auction?
I think what you need to know is very clear your walkaway figure. Your walkaway figure is the figure that you will 1,000,000% actually walk away from it. So even if you've got a very convincing real estate agent and an auctioneer who says to you, come on, sir, the reality is that if you pay another $5,000 now, in 10 years' time, it's going to be irrelevant. And you think to yourself, hang on a second, I've offered 700. If I go 705, and then the auctioneer saying, when the property is worth 1.5 million, you won't remember the $5,000 today. That all that stimuli happening there and there in that instant, and having social proof, watching another person bid on it, that you don't get carried away and become vulnerable, and you say, no, that's the number, that was my walkaway figure. I think you need to know that. I think you also need to know what I call your bargain hunter figure. The bargain hunter figure is the figure that you mathematically with a calculator have said, you know what, that's outstanding value, and what I'm going to do is I'm going to actually start the bidding at that, and I'm going to knock everyone out with that bid.
Bid big early, you reckon?
Yeah, I think that's a good strategy. I don't think it's guaranteed to work every time, but I think what it does is it does intimidate some buyers. So typically, if you've got a property, let's assume that's got a reserve of around 750, right? And there's a tendency for that kind of property that someone's going to put their hand up and start it off at, say, at 600. What I'm saying is, if you know at 700 it's bargain buying, don't start at 600. Go in there, When the auctioneer says, okay, ladies and gentlemen, enough of me, it's over to you, an opening bid or offer to get us up and running, and then you hear 700, nice and loud, and it scares everyone away. What happens is that there's a bunch of what I call novice bidders at an auction that just hear that, and they say, forget that, no point bidding against this person. This person wants it badly, and they actually don't enter the bidding game.
You as an auctioneer, and you see someone do that, does that endear you to that person? Do you sort of, I imagine you sort of start having relationships with different people in the crowd and how you deal with them. How would that influence the way that you would run an auction when you see someone go out of the gates like that?
Okay, so I like that because, Phil, I like bidding to start at a higher level because I can get to the result sooner. And one of the things I would do in that instance is that, because I know that's intimidated a lot of people, it hasn't intimidated me because I see this happen repeatedly over the last 15 years. So what I actually say, sir, fantastic. If there was ever a book written about how to bid at auction, may I suggest that you write it because you've nailed it. And then I'll say, ladies and gentlemen, please, let me tell you, it was a strong bid, but it could be his last. Let's test that theory out. Because what I want to do is make the other bidders there know that this is actually a tactic that he's got, that he may actually use to help him win against auctions, and I want to encourage bidders to come in.
I've sat at auctions and I go in there with my market bottom price and I'll push towards it, but then I know what my maximum is going to be. And auctioneers, they sit there, and obviously your job as an auctioneer is to get the highest price possible for the vendor. That's what you do. You see auctioneers go through the process of calling once, calling twice, calling three, and you know it's so far off where it's going to sell. How do you know, as an investor, as someone bidding at auction, when that's sort of bullshit or it's actually getting to a point where this thing's going to sell? Is there any indicator that you can tell?
Okay, so one of the things you can do, Phil, and you're not by law necessarily entitled to get an answer, but most times you will, is you ask the auctioneer, can I ask, is the property on the market? Because in real estate auction lingo, that is asking the auctioneer and the real estate agent, if I bid, is my offer going to get accepted if I'm the highest bidder? Which is basically saying, has it passed the reserve figure? So that is certainly a strategy that you can actually use if you're a buyer, to actually say, is the property on the market? Having said that, I do, in my auctions, tell people at the start, buyers, do not wait to hear the words on the market. They're not in the act. I call it 3 times and sell when I'm at the level, because I prefer not to be asked that. The reality is I don't want to get into a discussion, and I'd like people to be bidding, and I like momentum, and I like fluency, and I don't like stop-start, and I don't like people disrupting the auction, asking questions like that. So I try myself to eliminate the probability of having that asked, Phil. But I think for the listeners and myself, if I was bidding on a property this Saturday, I would be asking that question. Is the property on the market?
How do you work out, is there any formula or any sort of strategy you can give people to try and work out what that price is going to be when that property goes on the market? If it's listed at between X and Y, how do people create that number that says, okay, if it hits this, we'll sell it? Is that something that happens a long way through the sales process, or is that something that's set on the day from the auctioneer and the real estate agent and the vendor? How do you work that out? How does that happen?
There's 2 parts to that question. The first one is, how does the owner of the property come about their selling figure, their final selling figure? That's generally done with the 4 weeks leading up to the auction, because usually in real estate, what agents and auctioneers have got is called the hope to get figure. The hope to get figure is the figure that an owner is hoping to get when they first list their property for sale. The reality is, Phil, is that the hope to get figure that a vendor's got is higher than generally it will normally sell. Because most times when an owner is thinking of selling, they've got what I call, they're looking at life through rose-coloured glasses, right? Most people think that they've got the smartest kid. Most people think their house is better than any other house. It's that emotional connection that you've got to it. So what we clearly know is over the 4 weeks that the property's been on the market, after getting some offers and after getting some feedback from the marketplace, owners reassess their expectation and in some instances may reduce it by 5%, 7.5%. In other instances, in marketplaces where the market's good and in hot spots of Australia, they'll get that number and they'll exceed that number. So that is a work in progress. That happens right up until the day of the auction. So many reserves are actually set the morning of the auction, right? Now, what's the number that the buyer should be thinking of? Well, their project is quite different. They're not sitting there talking to other buyers, but what they're doing is they should be looking at sold results. Now, there's a great saying, and that is that there's no longer any blind dates in business. You don't have to be surprised at results. Everyone knows the price of everything in 2016. That information is provided via portals, by companies like, RP Data, Australian Property Monitors, Residex. That information is readily available. You go onto websites like realestate.com. If you go to the Just Sold section, you can work out the values. So your research is done during the weeks leading up to the auction by looking at sold properties in that area.
That's real smart counsel. Thanks, Tom. We're just going to take a bit of a break here and have a chat to our podcast partner, DHA, for a few minutes. In the studio, we have Elvio Pacelli.
Elvio, thanks for joining us on the show, mate. Appreciate you coming in. So you head up the property investment program at DHA. So DHA is the Defence Housing Australia. Can you tell me a little bit about that program and just a bit about the pedigree of DHA over the years?
Sure. Defence Housing Australia is one of the most successful government business enterprises. It was established in 1988 and with the purpose of providing housing and related services to defence members and their families. Today we have a portfolio of over 18,000 properties in the portfolio across Australia with a value of over $10 billion. We source our properties from a number of activities which include property development, acquisition of properties and also leasing properties from landlords as well.
A lot of Australians driving around, just around town, see these houses where defence service personnel might be living in. So they might not know that that is a DHA property and it's actually owned by an investor who's not part of the government. It's actually owned by someone themselves who's another Australian. Is that right? Is that how it works?
Absolutely. So DHA funds its operations where we want to maintain good quality housing for our defence members and refreshing the portfolio by selling those properties on a long-term sale and leaseback arrangement. So investors purchase those properties generally with a 12-year lease in place.
And who's buying, as investors, DHA properties? It's just there's no particular person. It's all Australians have the opportunity to buy these properties? Absolutely.
It's available to all investors and there is products and properties all across Australia. So in terms of all capital cities and major regional areas. And it's really appealing to investors who are looking for a worry-free investment because DHA has a unique proposition where we provide all of the management and tenancy services associated with that property, and that enables the investor also to geographically diversify, knowing that property is going to be maintained in whatever location.
So I invest in property and I've got a reasonably diversified portfolio. I've got properties in New South Wales and Queensland and down in Victoria. So DHA facilitates that same ability to diversify. So if I buy one DHA property, it might be in Sydney, there'll be opportunities for me to also find similar investments in other parts of Australia.
Absolutely. And the real appeal there is that obviously the different markets offer different returns and are at different stages in the property cycle. So our rental yields will vary depending upon market conditions in each market. Obviously Sydney's been through a period of strong growth and rental yields are lower. And where in other markets there's still expectation of capital gains, and so it enables the investor really to look for where those market opportunities are, but not forgetting that property investment is a long-term investment as well, and that there are property cycles and you need to hold it through those cycles as well.
What's a DHA investor look like? Are they sort of new to investing and they're buying their first homes, or have people got multiple investment properties via DHA?
Look, the portfolio currently, we have 10% of our investors hold more than one DHA property and 3% hold more than 2 properties. So there is that repeat business that we have, and it varies from the investor who is looking for a worry-free investment, their first investment, knowing that they're not going to have any vacancy risk because we will pay the rent irrespective of whether a tenant is in the property or not. So we minimise that. In addition to that, we guarantee the rent And we guarantee the rent based upon the initial rent. So if markets decline and the rentals fall, the investor still has that initial rent secured that they will receive. So they can have confidence in terms of their borrowing, knowing that their cash flows are going to be stable in that regard.
So when someone buys a DHA investment property, I imagine they can map out their future for the next number of years, knowing that here is going to be the cash flow implications on me in holding this investment property, and they can be very, very confident that there's not going to be any surprises along the way, that it's just a fixed payment they're going to receive every single month, and anything that happens to the property, DHA typically looks after it for them.
That's correct. The majority of the day-to-day maintenance is covered by the all-inclusive management fee. In terms of vacancy, that is also covered by DHA. So you've really got sort of that peace of mind in terms of the cash flows associated with your investment.
LVO, mate, I really appreciate you coming and have a chat with me about this. I'd like to get you back in the studio at another point in time to talk a little bit more about DHA property. But yeah, mate, great to see you, and thanks for telling us a little bit more about the program.
Thank you very much, Phil.
All right, let's get back to our regular programming.
I speak to a lot of investors, is what I do. Most investors get fatigued by auctions, so they go through the process of, I like that property. Yes, all the yield will work out. Yes, it's going to grow in value. All the fundamentals of property. They do a pest and building inspection. Yeah, good. They get to their 10th auction. They've been beaten every single time, and they just get downtrodden. A lot of the time, I think it's investors not having a realistic idea of the price and not doing sufficient enough homework. But as an investor, and you go through that process, and you just get beaten. Have you got any tips to actually, keep focus, keep on track, realignment or readjustment of their thinking? What do you say?
I mean, I'm an investor as well, right? And I can tell you that if I'm pursuing a property, I don't always go off and get what I call a formal pest and building inspection. I'll get a walkthrough inspection, and that is that I'll pay someone, like a builder, a lower amount of money, but they'll walk me through the property together, and all I want to do is look at basic fundamentals. So that's the first thing. The second thing I would say, Phil, is that I factor that I'm going to spend a little bit of money in the house hunting journey, and that money is not a cost, it's an investment. So I actually understand that I'm going to invest money. It's going to cost me 5 to 10 grand to actually buy a property, but it's going to buy me a better property, and I'll get the benefits of the value of that property in the years to come. The third thing I'll say is I do agree with you, and being an auctioneer, I probably shouldn't say it. I would, if given the choice in a hot market, I would try and not look at auction properties because they seem to attract a lot of interest. They seem to have a lot of competition. However, if you're in a marketplace where auctions is the done way, and that's the suburb or the regions you want to buy, you've got to go with the flow, because you're not going to turn around and eliminate and say, I won't look at auction properties, I'll only look at the private treaties. That's like opening up the white pages and saying, I'm only going to look at, the Joneses on page 24 to 28. I'm going to, not look at the others. You want to get a comprehensive view of everyone. I think buyer's agents, when you look at buyer's agents, Chris, if given the choice, they try and buy properties like yourself prior to auction.
It's good. Well, I like to cut the competition out wherever I can, mate.
Yeah.
So, but I've heard, some people say in terms of bidding at auction, some of the strategies. There's something I've heard where you turn up in a fancy car and wear a suit, and that's going to scare everyone that you've got plenty of money and don't bid against you. Do you reckon these are just myths or misconceptions, or is there any of that sort of carry weight?
It's really simple. If you're someone that's another buyer that gets intimidated by someone in a flash car with a nice suit that's got a loud voice, you might get intimidated. Alternatively, if you're someone that says to yourself, you know what, he's a bit of a smart aleck, this guy, I'll show him a lesson, it actually works the other way, and they actually go harder on the property. So I don't think that you can turn around and say, here's my clear strategy. But 15 years of auctioneering, 6,000 to 8,000 auctions later, I would say, the two rules are: ask if the property's on the market, and when bidding, select the figure that you call your mathematical price, which is a no-brainer price, and make that your first bid, and make it nice and early. and make it nice and loud, because you will scare some of the other people away. You don't necessarily have to be wearing a nice tuxedo and have pulled up in a $200,000 Porsche to actually show that you really want that property.
So another thing I've heard about bidding at auction, always use strange numbers. So you might go $740,000 and $50 to try and sort of make it a little bit difficult for people to do sort of mathematical calculations on the fly. Do you reckon that holds any currency?
I think what it can do is, if you're up against an auctioneer that doesn't do a lot of auctions, that maybe does 1 or 2 every week instead of 10, and that you're not used to calling lots of bids and numbers, it can actually confuse the auctioneer. Confusing the auctioneer can slow the auctioneer's momentum. Slowing the momentum can take a bit of energy out of the auction, so it's worth a try. I do know that buyers agents, I had a property recently in Leichhardt, and the bids were 732, 741, 747, 500. So there was really not much logic to it, and the only logic I could conclude at the end, and he confirmed it to me, was that what he was trying to do is actually confuse everyone in the crowd, including the auctioneer.
Interesting. So know your auctioneer. Yeah, if you're up against you.
Correct.
We're going to wind up, mate, but what's the funniest thing you've ever seen at an auction?
The funniest thing I've ever seen at an auction is I was auctioning a boarding house at King's Cross, and it was a Saturday morning at 9 o'clock. And a boarding house was being used by escorts, and I remember having to, the agent take me through the property. I had to look at each room. It was like a 30, 40 bedroom boarding house, right? And there were prostitutes at work there, and they thought that I'd come along as a client and told me to wait in line.
And sort of your auction experience, is there any memorable worst auction that you've ever had? Something where you just go, that was just a horrible, nasty experience.
Yeah, there was
probably the same as the funniest one is the worst one.
Yeah, look, there was an auction that I had where I had every TV channel, I had every newspaper company covering this property a couple of years ago, and we're close to the conclusion of the auction, and it hadn't been sold yet, and then the rain and the hail started bucketing down, and I kept going, but people started leaving, and in the end, what was a crowd of 350 ended up being me, the agent, and the 2 final bidders moving into the front bedroom, just ourselves, drenched, fighting it out in $1,000 bids. I remember that auction.
And you sold it?
Yes, it sold. It sold well. It was always going to sell well because it was this landmark property.
And what's the biggest gap you've ever seen, just a final question, between what the on the market price was and what it actually sold for? Is there anything that's streets and streets apart?
I work in a marketplace, the Inner West, which I would say the Inner West of Sydney, which is, I would probably say, the hottest real estate marketplace over the last decade. So there have been clear instances. And having said that, I'm not one that auctions multi-million-dollar residents like the 5, 10, 15 million. So if you spoke to other auctioneers in the eastern suburbs, like Cooley's auctions that do double bay auctions, but I can tell you that there have been plenty of instances where properties have sold for 25 to 40% more than what the owner want. It's really common for me to be selling things 10 to 15% more than what the owner has wanted, because just the
nature of the market.
Yeah,
interesting. Tom, mate, really appreciate you letting us get inside the head of an auctioneer and learn what to do and more effectively. So really good, mate. We'll get you back on the show at some point.
Yeah, love to.
Be great. Thanks for tuning in, everyone. smartpropertyinvestment.com.au. You can follow us on all the social stuff. You can follow me at Philip Tarrant on Twitter. You can also follow Tom at Tom Panos if you want to hear what he's up to. He's always got some interesting stuff about what's happening in the world of auctions. Look forward to catching up again next week. Email me at editor@smartpropertyinvestment.com.au if you'd like to ask any questions. See you later. Bye-bye.